Hello everyone, and thanks for watching Edupedia World Videos. Today we will discuss about types of accounting, its characteristics and objectives. So let's start with types of accounting. As we know that economic development and technological improvements have resulted in an increase in the scale of operations and the advent of company form of business organization. This has made the management function more and more complex and increased the importance of accounting information. This very need gave rise to special branches of accounting, namely financial accounting, cost accounting, and management accounting. So let's start with financial accounting. The purpose of this branch of accounting is to keep a record of all financial transactions so that number one, the profit earned or loss sustained by the business during an accounting period can be worked out. Number two, the financial position of the business as at the end of the accounting period can be ascertained. And number three, the financial information required by the management and other interested parties can be provided. Now, cost accounting. The purpose of cost accounting is to analyze the expenditure so as to ascertain the cost of various products manufactured by the firm and thus fix their prices. It also helps in controlling the cost and providing necessary costing information to the management for decision making. Now, management accounting. The purpose of management accounting is to assist the management in taking rational policy decisions and to evaluate the impact of these decisions and actions. Now let us discuss about characteristics of accounting. By characteristic here we mean qualitative characteristics of accounting. There are major four qualitative characteristics of accounting, namely reliability, relevance, understandability, and comparability. So let's start with reliability. Reliability means the user must be able to depend on the information. A reliable information should be free from errors and bias. To ensure reliability, the information disclosed must be credible and verifiable by independent parties. Now let us understand about relevance. To be relevant, the information must be available in time, must help in prediction and feedback, and must influence the decision of the users by number one, helping them form prediction about the outcomes of past, present and future. Number two, confirming and correcting their past evaluations. Now, understandability. Understandability means Decision makers must interpret accounting information in the same sense as it is prepared and conveyed to them. The quality that distinguishes between good and bad communication in a message are fundamental to the understandability of the message. A message is said to be effectively communicated when it is interpreted by the receiver of the message in the same sense in which the sender has sent. Accountants should present the comparable information in the most intelligible manner without sacrificing relevance and reliability. Finally, the comparability. It is not sufficient that financial information is relevant and reliable at a particular time, in a particular circumstance, or for a particular reporting entity. But it is equally important that users of general purpose financial reports are able to compare various aspects of an entity over different time period and with other entities. To be comparable, accounting reports must belong to a common period and use common unit of measurement and format of reporting. Finally, the objectives of accounting. There are three major objectives of accounting. First, maintenance of record of business transaction. Second one is calculation of profit and loss. And finally, the depiction of financial position. I consider these objectives are self-explanatory. This is all we have for this session. Thank you for watching this video.